David Buckland, the CEO of Montgomery Asset Management, and Michael Gable from Fairmont Equities. Gentlemen, thanks for joining us.
Pleasure, Peter. Thank you.
It's a great chance to debate a really important issue, because none of you guys would be surprised to hear that I was excited last week when the 6,000 level was cracked. But I'm used to this. Markets don't go up in straight lines. Bucko, you don't necessarily care about indexes. You want to pick individual companies, but you have a view, even though you might keep it secret. You do have a view on what you think might happen to the index. So what do you reckon?
So I think what happened was we saw a very, very good October where the market was up well over 4 percentage points. And year to date, the market's up about 8.5 percentage points.
But when you throw dividends in or capital gain?
No, that's inclusive of dividends.
Okay.
Okay, so that's the accumulation index. And so half of that gain took place in 1 month. Yeah. And I think there was a big pull-up effect from the very, very strong rally we had overseas. So as you know, we've seen the FANG stocks, all up sort of 50-something percentage points calendar year to date.
Yeah, tech stocks in the USA.
Yep, yeah. And then we've seen Alibaba and Tencent in China. They're up over 100% year to date. So I think what happened was we had a combination of a few things, bit of a reflation rally, the Trumps through with the tax cuts possibly, tech going bananas overseas, moving from sort of optimism to a bit of euphoria, and I think the Australian dollar just coming off the boil too, Peter, is really starting to give things a bit of a push along. So, very, very good October. Market's sort of having a bit of a break now. Where to from here is the $64 question, but all I know is that these technology stocks are behaving sort of like lottery tickets a bit.
Okay, but David, from my point of view, we know the Australian economy has been underwhelming. We know Australian companies and their profit performance has been underwhelming. Some analysts are starting to improve their expectations on earnings.
Yes.
I think the economic outlook looks better now than, say, 6 months or 12 months ago. Would you agree with that, despite the fact that I know you're a little bit negative?
Yeah, I think that's right, Peter, but I do think, there's this big sort of China type thing going on that we've got to be aware of, and that's, you and I were just talking about it earlier in terms of Matt Barry's big essay that's just been released, and fixed asset investment in China, it's a bit unknowable, but it seems to be slowing. But that's a bit unknowable if that's a sustainable slowdown or just a temporary slowdown.
Okay.
That obviously plays a big role. And then on top of that, the whole housing side of things and our banks. Our banks are definitely they're definitely going to go through sort of good times and less good times in terms of sentiment, and I think that'll be sort of quite related to the whole housing situation.
Okay. Well, I know you don't hold any banks or material stocks.
No, we're underweight the banks. We do own some banks.
Oh, okay, right. All right. Okay. Now, David, you hold that. Your global fund's done very well.
I'm very pleased with that.
Your domestic one, you've held 25% cash,
yep.
And you had no great expectations of the overall index doing well. And of course, you're absolutely right until October. There was a kick out in October. You still could be proved right if November, December tends to be rough. If the dollar falls, say down to 70, which could be a big call, but when the Yanks start raising interest rates, the market could push the 76, 77 cent Aussie dollar down to 74, 75.
Oh yeah, or even lower.
And then when you start seeing more across 2018, then we might see a 70 US cent. Is that when you start seeing some value in some Aussie companies that you're currently not seeing value in?
Yeah, I think so, and I think you're right. So the Americans look like they'll push their interest rates up for the fourth time in 12 months in December to 1.5%. And if we're on 1.5%, they're on 1.5%, I think the Australian dollar, could quite easily see 70 cents sometime in the sort of short to medium term. And that obviously will be very, very stimulatory for some sectors of our market.
Yeah.
But I think I think we've also got to be a bit aware of this whole housing situation, which I know Roger's been talking about for a long time.
And by the way, Mike, I want you to listen to this, and I hope you disagree with him, but go on.
Oh, well, just the housing situation. We have a situation where there's, it's been well documented, but we have, several hundred cranes in the main cities of Australia And if you compare that, we have maybe 175 cranes in the top 14 cities of America. So that's a bit weird. But of the...
Well, you're saying that there's been a building boom here.
There's been a building boom, which is
might
phenomenal.
prove unsustainable.
Correct.
Okay.
The vast bulk of those cranes are building apartments. About a third of the cranes are in suburbs that are sort of basically becoming no-go suburbs for some of the major banks in terms of, permitting lending and things like that. So we've just got to be a bit aware that particularly when Sydney's on 13 times disposable income and Melbourne's on 10 times disposable income, we just know that with Australian households on 200% of debt versus their income, we just know that there's sort of any sort of shock, either higher interest rates or availability of credit or higher unemployment, any sort of shock could cause a bit of pain.
Yeah, but David, we know you're a much more reasonable man than Roger Montgomery, your boss. And we know that the figures you quoted are right. So a lot of households are carrying lots of debt. But if some of the economists are right and interest rates don't rise until 2019, does that mean that there's less of a worry? Your concern would be if rates start rising mid-year and the Reserve Bank needs to raise a couple of times. That's when they think the chickens would come home to roost to really undermine consumers?
I don't think the cash rates will go up, which is set by the Reserve Bank of Australia, but you've got to remember that our major banks do get a lot of money from offshore.
Yeah.
And what I fear is that at some stage the long end of the yield curve, like the 10-year money, which we know is insanely low virtually everywhere in the world, just starts to sort of pick up. And what that ultimately does is it means our banks may have to pay more for their financing.
Yeah, which has happened in the past.
And what they'll then do is just tweak the pricing on their lending, which they've been gently doing now for sort of about 6 months.
Partly driven by APRA, of course.
Absolutely driven by the regulatory authorities.
Okay, now Mike, you brought some charts along.
Yep.
Are any of these charts going to make us positive or negative on the outlook?
For the Australian economy?
Or the Australian stock market?
I brought along a few stock recommendations. I thought I'd throw out a few free tips.
Okay, well, we've talked the big issues. Let's go to some various companies and we'll see if David agrees with you, all right?
Okay, so the first one we have is Westfield.
Yep.
So Westfield, this is the one that owns the overseas assets. So our analyst has liked Westfield for a while, but
It's struggled for a while, hasn't it?
It has. So we can see on the chart that it's fallen from $11 over a year ago to under $8. I think there was some concerns over the progress of some of these overseas malls, but
the Amazon threat even relevant in the USA.
But as I've tried to tell a lot of people, it's the overseas assets. Amazon's already there. It's more of a known quantity than here in Australia, where everyone's just throwing their toys out of the basket, don't know what's going on.
Yeah.
But look, with Westfield, what I'm trying to show here is it's fallen to a level back in August where, in my opinion, it's found a low. So it rallied off that quite strongly. The last several weeks, it's been tracking sideways, and then we saw it break out last week on their third quarter update. So the average broker target for this is close to $9. I think it's on the move now, so if you like the stock and you've just been waiting for this thing to stop falling, I'm pretty confident it has stopped falling, and we could possibly see it trade up towards $9.50 next year.
Yeah. David, your view on Westfield?
Not really, Peter, but I do make the comment that a lot of retailers in the US of A are going broke at record levels. The Amazon
big names
effect,
too.
The Amazon effect, the sort of digital deflation effect. So all I would say is that buyers of a company like this should look at the leases very closely. And
you're saying like anchor tenants could become under pressure and leave.
Yeah, just ascertain the strength of those anchor tenants, and if you're comfortable that they're going to be long-term survivors and thrivers, then you know you're going to get paid your monthly your rental bill.
And certainly, Mike, there's been some good news for shopping malls in the States recently. That's part of the reason why there's a kick. What else you got?
Well, the next two charts are they're more little technical trades. So there's a couple of stocks which are very heavily shorted in the market. Syrah Resources and Western Areas. Now, what I wanted to show was the way they're trading on the chart indicates that they're going to head higher. So, look, they're not everyone's cup of tea, and I just approach these sort of stocks as trades. So I'm sort of in and out. Don't need to know, who every shareholder is and all the financials going back 10 years.
So which one is this?
So this one's Syrah. So graphite producer. What's interesting here, what I've circled there is a pattern known as a inverse head and shoulders. It's got a funny name, so some people don't pay too much attention to it, but what it's essentially doing is showing us that a low's in place, and on the right hand side we've got a couple of arrows. The down pointing arrow shows us the depth of that pattern. And what we do is we flip it over, and that's the arrow on the right hand side pointing higher. So what this is telling us is Syrah's got about 21% of its stock sold short.
I know.
It's decreased a little bit over the last week, but the way it's trading to me indicates we'll at least get a pop up towards 450, maybe even higher. So at the moment, the way it's trading here, it looks like shorts are covering. So if you're in this stock or you're into these sorts of stocks in general, I think now's the time to at least stick with it.
Well, let's go to a wise old man of the game. What do you think of stocks like this, when the market's shorting them, and we know Syrah is up one day and down the next? What's your feeling? Is it purely a short-term play, David, or is it something you really have to know what you're doing?
Well, I think Mike made an appropriate comment about it's either your cup of tea or not your cup of tea, and it's not my cup of tea. But I will say one thing, Peter. I've very, very rarely met a very wealthy chartist. so that's okay. Look, everyone can use any tool they want to try and make money. But I have been associated with a lot of people who've done charting in the past, and I do think it's difficult.
My view is that when you've got a strong fundamental view about a company, and the charts are also saying that the money's going in, that makes me feel confident. You agree with that?
I agree with that.
Yeah. Without a doubt. Okay, Mike.
But I don't know enough about the stock.
That's where we get our buy recommendation for Westfield, which is a great holding, and then these are the little things on the side that you play.
Okay, your final chart.
Western Areas.
Okay.
So nickel producer. We can we could take a view on nickel. We could take a view on Chinese steel production. In a year from now, we'll probably get it wrong. So again, just looking at how it's trading. Now, this is a huge downtrend in the price of Western Areas from about $7 down to $2. And what I've circled there on the right-hand side is just the last few weeks. So I know everyone's talking about the huge run-up in Western Areas, but when you put in perspective, it's just a little move.
Yeah, good point.
So it's broken a long-term downtrend. This thing could have some fairly decent upside if all the shorts start covering. So a month ago it was 15% sold short. Now it's about 11%.
Okay.
We saw Fortescue go from $2 to $7. We've seen the big moves in Santos, even Flight Centre earlier this year when all the shorts started covering. So in my opinion, it looks like something's happening with Western Areas. Again, if it's your cup of tea, I think that's a buy signal. Okay,
one last thing, Bucko. I'll let you finish off this little segment. If you're going to, how are you guys going to invest for 2018?
I think the opportunity still remains overseas. So the overseas market has been outperforming the domestic market quite solidly.
By a lot.
And I think also with the possibility and maybe even probability the Australian dollar heads towards 70, I think you might get a bit more of a kicker out of the currency, assuming you remain unhedged. So if you gave me $1, Peter, I'd probably put it into the Montgomery Global Fund.
As I would have thought you would. Thank you, David. David Buckland from Montgomery Asset Management.